everybody. Welcome to another edition of Quant Labs. Brian here. All right, so today is July 7th, 1 p.m. Eastern Standard Time. We've got two new articles actually came up on James Simmons. This was just posted with a rare interview, up to date, from Oslo, University of Oslo. Did an interview, was posted. Here's a quote from him. Quant funds may have made markets somewhere more efficient. Of course, the way you make money is to find anomaly, some minor anomaly. It's usually very small, but it's there. I really don't think the markets are very much more efficient than they used to be. So I guess things have not changed since he was in his days. We're finding them, and it's benefiting people. If you want to know more, just go to quantlabs.net/banking. Here's a sample, a way to create your own private bank. Again, quantlabs.net/banking. Another article that was really good on James Simmons, $28 billion day trader. Even Warren Buffett acknowledges at newtradeu.com. And lots of quotes here from Warren Buffett, in fact, during the Berkshire Hathaway 2021 annual shareholder meeting. They asked about quants and James Simmons. What do you think of quants? This is Buffett now. Jim Simmons' Medallion Fund has done plus 39% net of fees for 3 decades, which proves that it works. His response, but they were very smart. Charlie Munger said, yes, they got very rich and very high grade by the way James Simmons. Now remember, Jim Simmons is a mathematician. But we are not trying to make money trading stocks. We don't think we know how to do it. So that's obviously a big kudo. There's the details of the strategy. This is probably going to be pretty well up to date. Mathematic professor up to 1978. That's his whole history. Now this is where it gets interesting. His attitude towards backtesting, because I don't think backtesting works the way it did under James Simmons, just due to it was the early days for him. So what it's morphed into is not the same, obviously, especially if you're using some of the more popular back trading software websites. But nonetheless, this is what he said about it. We searched through historical data looking for anomaly patterns that we would not expect to occur at random. So he's looking for patterns there. And as I said, we're finding them. Backtesting historical price data can give you an edge in trading price action. It's really morphed into something very inefficient, the term backtesting. Markets are traded and invested by people with emotions and opinions who create patterns. Not consistent. It's very short-lived. In my case, it's really, you want to look for predictable as well, and not just have a solid move up. Price action patterns can repeat. That maybe there is, if you follow business cycles and economic cycles, that might be true, but that's like years in the making. But you need to learn to find a way to trade these patterns with an edge. I believe in this concept. Trade your systems with discipline. Yeah, don't override the models as it's said, and that's true. Okay, so remember, this is another big factor which I do believe in. You have to let the system do its thing. Otherwise, you allow it to break down, everything breaks down. But that's why it's predictable and dependable on the patterns you're using. Trade a diversified watch list for more opportunities. I would agree with that. That's what I do right now in this period of time. Just saw the CFA guys yesterday in a bank, just to let you know, 40 to the floor, blah, blah, blah. They're very good at minimizing loss, but one of the things that's very important to know, with what I do, and they verify what I do, and which is really, I watch everything, but right now everything, I don't want to say trendy, but the only way to make money in the market right now is what they call Forex cross patterns. So that's what I found. It's so predictable. We have three criteria: if it's publicly traded, liquid, and amendable to modeling, we trade it. Okay, so obviously the big one is liquidity, and amendable is a big key factor there. You don't want you don't need a high win ratio. That's somewhat true, because if you're taking on fewer positions but have higher profit per position, that's beyond true. But they're kind of the opposite. We're right 50.75 of the time, but we're 100% right 50.75% of the time. You can make billions that way. So that's what they're doing. They're making small amount of bets, and when they feel that those bets, because it's really what it is, predictable bets, usually random bets, the position size is probably really small, but they're doing so many that half of them are profitable. And because of they're making so many, it's the volume of that profit that really drives up that profit. That's what I'm seeing here. Now, this is where it gets interesting here, where Jim Simmons' models did not need a high ratio to make money. If you have a 1-to-2 or 1-to-3 risk-reward ratio, you can make large volumes as long as you don't have any big losses. That's what I just said. That's very true. So it's a risk-to-reward ratio that's important here. Universal principles of profitable trading. Some quotes here. This is why I like this post a lot. Things we are doing will not go away. We have bad years. We may have terrible years sometimes, which they just had, I think, 2 years ago. But the principles we discovered are valid, obviously, because he's $28 billion, so people listen. No trading system works all the time in every market, but the principles in profitable trading stay valid. Not necessarily true. Profitable trading stays valid, yes, when the market allows, the market regime allows, but the market regime can change so fast. That's why you got to be able to adapt. Thus, you have so many people in the Bitcoin bros giving up because they don't know how to adapt. A lot of them probably don't even have never gone through a downturn, or let alone a recession. Profitable trading comes down to math, the math of risk management, the math of position sizing to avoid the risk of ruin. Yeah, this is very true. Modeling of a trading system with a positive expectancy, along with cutting losses short and letting winners run. That's why, as a human, it's very hard to allow these conditions, because humans are not very good at finding when to know when to cut losses when they should. Biggest lesson from Jim is that profitable trading is built on foundation of math. Right there. That's very important. Math, but a human has to have the discipline to follow the math. That's why you have to have everything computerized or automated without allowing emotions to override the good system. Yeah, that's true. So it goes on. Then there's the book, The Man Who Solved the Market, from Greg Zuckerman. I haven't read it myself, but this again, these are different perspectives right from this book, which says Jim Simmons' belief system: there are patterns in the market. I know we can find them. It's like looking for gold in a mine, I guess. We find this. With this foundation, he had some of the best mathematicians, statisticians, computer programmers, and scientists to find them. He was successful in finding them. His fund started with a successful futures trading system and branched into other, including bonds, currencies, and stock market. Renaissance was one of the quantitative hedge funds that compiled a database of end-of-day and intraday action, history, financial markets, and ran powerful computer back tests on the historical data to find market patterns, correlations, and repeating price moves in short time based upon memberships between catalysts and investor behavior, and so on. I'll let you read the rest. But very, very if you love math and love trading, you will enjoy this book as a deep dive into both. Easy and enjoyable read, and written more like a novel than a trading book. So there you go. Really good. Just as a reminder, we got our quantlabs.net/banking to help you find those similar opportunities. But we shall see. Looking good so far with the latest slowdown in the markets, but trading baskets that I generate are pretty good. And been, again, verified, double verified now, triple verified by 2 CFAs in a large bank with fancy offices and great tasting espresso. Alright, we shall talk to you later. Thanks for watching.